Hello, welcome to Capital Market Live on Channels Television. I'm Ladi Williams. First things first, let's check in on the markets. Let's take a look at how your money performed this week. Let's start off with European markets. Now we see stocks close higher on Friday as investors digested the latest monetary policy decision from the European Central Bank. FTSE 100 rose by 0.19%, while France's CAC index that climbed by 1.34%. And the German DAX rose by 0.41%. The ECB opted to raise its benchmark policy rate by a further 25 basis points. In a press briefing following the decision, ECB President Christine Lagarde said, "We are not thinking about pausing." Moving on to Asia now, Asia Pacific markets were higher on Friday as the Bank of Japan again left its benchmark interest rate unchanged at 0.1% in mainland China. The Shanghai Composite added 0.63% to close at 3,273 points, while in Japan, the Nikkei 225 traded up 0.66% to 33,706 points. And in the U.S., stocks slipped on Friday as Wall Street closed out a huge week in which investors received a pause on rate hikes from the Federal Reserve, plus encouraging inflation data. The S&P 500 ticked down 0.37% to close at 4,409 points, while the Dow Jones Industrial Average slipped 108 points, about 0.32% to close at 34,299 points, while the Nasdaq Composite lost 0.68% to finish the session at 13,689 points. The Federal Reserve delivered what investors wanted this week when the central bank left rates unchanged on Wednesday after 10 consecutive hikes. Let's check out the bonds market now. According to data from Bloomberg, Nigeria's Eurobonds have been reacting to moves from President Tinubu, from the Ouster Central Bank Governor, Mr. Godwin Emefiele, and the unification of the FX windows. For analysis now, joining me is Ayodeji Daudu, Head of Africa Research at Bank Trust & Co., joining me via Zoom. Great to have you on the show. Good evening.
Good evening. Thanks for having me, Ladi.
So definitely, President Tinubu has hit the ground running with signing of multiple bills. We've seen the ouster of CBN governor. Paint a picture of how Nigeria's Eurobonds market, is reacting to all of this. Is it time? Are the investors seeing, Nigeria as where they want to put their money in at this point?
I think so. I think there's a lot of improvements around the sentiments towards Nigeria over the last possibly 3 weeks. A lot has happened. A lot has happened in terms of the new presidency and the ousting of the CBN governor. We've seen the relaxation of the Naira in the official markets, which we believe is guiding towards unification of rates. I think those are policy reforms that the local and external investors have really been calling for over the last maybe 5 or 6 years or so. And I think it's been greeted positively in the Eurobond market. If you look at yields have largely compressed over the last 2 weeks. I mean, we haven't seen yields at the levels currently since possibly before the ratings downgrade in January this year. So I'll say all in all, it's been very positive from the government, and it's been welcomed by investors. I think what investors now been looking at is commitments and execution of these new policies.
And before now, Moody's downgraded Nigeria's local and foreign currency ratings. What are you seeing for sovereign ratings going forward in the short term?
I think in the short term, a lot of rating agencies, the reason for example, Moody's downgrade was the pressure fuel subsidy was having on the government's fiscal and external position, as well as concerns around the monetary policy, transmission effects, and the FX policy as well. We've seen changes there now, which should be a positive for Nigeria's rating. But I think, again, there has to be some time given to see how these policies would actually play out, whether the government will be committed to some of these policies. I mean, you take the FX potential unification, it's going to be quite painful in the near term before things get better. I mean, you're going to see the Naira depreciate quite aggressively in the official markets as investors try to repatriate funds that have been trapped in the country over the last 2, 3, 4 years. That's going to put a lot of pressures on the local currency, and that will probably test the government's commitment to this policy, as it will likely have an impact on inflation as a result.
I guess all eyes on the government's commitment going forward to keep this run for that market going. Thank you so much. I was Ayodeji Dawodu, Director of Fixed Income, Bank Trust & Co. It's great having your perspective today. Thank you.
Thank you very much.
All right, let's bring it to the local bourse. Now, we're seeing the trading week and the Nigerian Exchange Limited All-Share Index and the market capitalization appreciated by 5.49% to close at 59,096 there and 32.126 trillion. That's respectively for the all-share index and the market capitalization. The holiday shortened trading week recorded 2 days of gains against 2 days of losses. For the sectoral performance, saw consumer goods, insurance, oil and gas, all counters closing in green, while the industrial goods counter, that was the lone loser, down by 1.63%. Well, joining me now from our Abuja studios is Professor Uche Waleke, Professor of Capital Markets, Nasarawa State University, and President, Capital Market Academics of Nigeria. Great to have you on the show. Good evening.
Thank you, Ladi. Good evening. Thanks for inviting me.
So, Professor, I know you've been in this market, long enough, and I want to know, have you seen the market react to a new government like we're seeing right now in their policies in such a short time?
I think this is unprecedented. If you take it from 1999, it's been quite unprecedented. I also recall that when President Buhari was coming in March, after the announcement that he has won the election. As a matter of fact, as soon as former President Jonathan put that call through to President Buhari, we saw again the market leap. I recall at that time it was described as the Buhari effect. So we had the Buhari effect around March of 2015, but it didn't last. It didn't last because of the fact that shortly after the president came into office, it took him time to put a number of things in place. But this one, as I said, is unprecedented. 5.49% just this week. If you look at year-to-date return has gone up to 15%, 15.112%. It was under 10% just a few days ago. And if you look at what has happened actually, not surprisingly, much of that appreciation has come in the financial sector, particularly the banking sector. The NGX index this week, for example, appreciated by as much as 12%. So outperforming the market, as it were. The market overall, printed around 5.49, just as we've seen. So it's been quite unprecedented, and it's not just in the local bourse. It just reported it. We've seen it across markets. Our Eurobonds prices are also rising. I was looking at the Eurobonds closing price and yields as at Thursday, June 15. You notice that the 500 million euro bond that is maturing next month, July, the yield is below 1%. This is a bond that was issued at 6.3%. So the yield today is below 1%. The price is trading around 99.9. That's close to a par value of 100. So that tells you that that's positive. And if you also look at the others, up to 2051, we also have Eurobond that we are going to pay back in 2051. That too equally appreciated in price, even though the price is still above the yield at the yield rather is still above the yield at issue. So back home, as I said earlier on, our markets are doing well. As I said earlier on, the banking index has shown a lot of promise. Ditto for the oil and gas. If you look at year-to-date return for the banking index, it's well in excess of 41%. I just told you that year-to-date return for the entire market is 15.12% as of Friday. And for banking index alone is 41.
All right, Prof.
Oil and gas is above 50.
Okay, Prof, looking at what we're seeing, right now, do you see this move, this bull run, is this sustainable in your opinion? And what do you think is going to be, that downside to stop this, run we're seeing in the market?
Yes, what is happening now, again, is a reflection of the fact that we're about to see a displacement effect in the market. By displacement effect, I'm referring to the fact that investors' mix since 2020 has been in favor of domestic investors. Recall, following COVID, foreign investors, a good number of them took flight. So the market transactions in the market, have been dominated by domestic investors, especially institutional, including retail investors. But what is likely to happen now is that a lot of foreign investors, are showing interest. So you find even domestic investors positioning in anticipation of that. And that's also why, I just told you, the banking stocks, have responded very positively. Remember that the banking, the big banks, have proved over time to be the major vehicle of capital importation into the country. The likes of, Citi, although Citi is not listed, but Stanbic is a quoted company. And that's why Stanbic, you can see the performance of Stanbic. Today is selling as high as 52 Naira. A stock that was 30 Naira just, the other day. The likes of GT company too, today 30 Naira 50 kobo, Zenith 30 Naira 50 kobo, even Access at 14 Naira, and First Bank at 15 Naira. So these major banks are, appreciating significantly on the back of this unification, on the back of expectation that more capital inflows, are going to come in. So that is what is happening. So when you have this foreign investors coming in, as I said, they're likely to also displace domestic investors, in the near future. But again, you asked about sustainability. For me, except we get to the point where we diversify our export base, what is happening now is just temporary. Because, mark you, for the portfolio investment is nothing but hot money. They are coming now because they feel that Naira has been, is been devalued, because that's what it means in effect. And so the return on investment is going to be high. Okay? So we know that usually at the least shock, they leave. So sustainability, again, is something that is tied to our fundamentals, economic fundamentals. If we have enough that, if once we're able to diversify our export base, then we can, to that extent, now say that the value of the Naira is going to be stable. Stability is what they want. They want, a situation in which they can have an idea with respect to, what it will take if they want to take out their money, and also, bring in their money. So that's important. And the only thing that will guarantee stability, less volatility in the forex market, is taking care of the supply side in particular.
Yeah, that means we need more inflows of foreign currency, at this point to sustain that. But we'll continue the conversation right after this break. Thank you so much for staying with us, Professor Uche Waleke. We'll come back and dissect what's happening right here in the local bonds. That's in a moment. Do stay with us. Welcome back. We're still analyzing the week for the capital market, seeing that massive bullish run we're seeing in local bourse this week. I still have with me Professor Uche Waleke, Professor of Capital Markets and of Nasarawa State University and President, Capital Market Academics of Nigeria. Thank you for staying on, Professor.
Thank you, Ladi.
So, Professor, looking at the run we've seen, so far, definitely not all investors would have, enjoyed this bull run that we're seeing in the market right now. For those still on the sideline, what do you think should be the plan of action to get in and, taste some of this action we're seeing in the market?
Well, it all depends. If you don't invest blindly, for me, what should drive stock prices, sustainably, are fundamentals, company fundamentals, so that they don't get in when a stock is already selling at a very high price. If you like, a stock is overvalued. When a stock is overvalued, you don't buy. You go in when you think a stock is undervalued. Now, if you look at some of these stocks I mentioned now, they are trading at they are 52-week high. Okay, so I will still advise caution. Any investor in the market today, has to be cautious, and of course, you invest based on, as I said, a thorough analysis of the markets and company, fundamentals. That is what should drive, any investor that is going into the market. And let me also quickly say this. You see, when we talk about foreign exchange management, it has two overarching objectives. The first is you want to maintain the value of the international value of your currency, and then the other one is, of course, you have to maintain external reserves. So, of course, these two go together. Why I'm saying this is that what we have now is not a complete float of the naira, because if you completely float the naira, which in my view, I would always recommend that there has to be a plan, a gradual plan to, do so. That would mean, for example, liberalizing the market in such a way that even the items you are denying access, will be welcome. So to that extent, I want to agree with what has happened so far. The fact that on the demand side, the 43 items that are still not eligible to participate in the I&E window, in respect of those, status quo, is remaining according to the circular from the central bank. So I think that is very important. It's also important to recognize that even in the I&E window, the central bank has said that the bid and ask spread, should not be more than, 1 naira. So that also tells you that there's a bit of, regulation going on. Eventually, these things are going to be relaxed, in my view, but it shouldn't happen in one fell swoop. Whatever policies we are putting out there, it's important we look at the merits and demerits and try to, balance them in such a way that they don't cause serious distortion, in the economy. The same advice I'm also giving with respect to the fuel subsidy that has been removed. It's important too that we think of stopgap measures. How do we balance whatever policies we have, which are good? How do we balance them to minimize their adverse impact, on the economy? There's no doubt about it. These two reforms which are welcome, will no doubt exacerbate the inflationary pressure, that will have in the country.
All right,
and
Professor.
Where inflation rate is rising, you can be sure that it will also have impact on the market, eventually.
Right, and talking about, the value of the naira, this see JP Morgan, American multinational financial services firm, they're saying the naira is expected to appreciate and trade about 600 naira to the dollar in the coming months. How do you see this forecast?
Yes, I read the JP Morgan's report. As a matter of fact, yes, investment banks are hailing the move by the central bank. Our development partners, IMF, World Bank, they're also hailing the move. And just as you mentioned earlier in the program, it's not unlikely that eventually when the rating services, come up with their reports, talking about Fitch, S&P, and Moody's, these reports, the ratings will be favorable. So, yes, JP Morgan is optimistic that it's going to stabilize at 600 naira. I was looking at the rates on the CBN website again as of Thursday. What the CBN put there is 589, 589 naira at the I&E window. Okay, but that stability, remember I said that stability, depends on a whole lot of factors. The only way that you can maintain allow market forces to determine your currency and you have stabilized is when you have either you have sufficient reserves or you have again enough inflows by way of exports. Remember, what is coming in now is FPI, foreign portfolio investment, and I just warned you that those ones are not sustainable, not really long-term. They are impatient capital, if you like. We call them hot money. But what we actually need in the country is FDI. And FDIs may not start flowing in immediately because FDIs, of course, are longer term. And there are also other factors that influence FDI flows, not just your exchange rate. Your security situation is there, your overall business climate, these are the ones that will actually bring in FDIs. But of course, even as we speak, the crude oil still accounts for over 90% of our forex. So except we, do something about this, I'm talking about diversifying the export base and having, a good quantum of FDI, that stability, may not crystallize, may not
materialize. All right, Prof. I guess we still have more steps, to take to reach that El Dorado. But let's look at monetary policy, of all of this. Now, we see the central bankers globally, they've been hawkish since 2022, trying to rein in inflation. But President Tinubu did hint at the potential for a lowering of interest rates in his inauguration speech. Will this be a good move? We did see the U.S. Fed, they paused, their last meeting.
Yes, but again, what is interesting is that if you notice, even the U.S. Fed and the European Central Bank, the pace at which they've been tightening monetary policy, has reduced. It used to be 0.75%, or rather basis points, and then 50 basis points. What we saw last, has been 0.25. So that pace has, been slowing down. Back home in Nigeria, yes, the president has expressed his wish to have a low interest rate environment, which of course will enable businesses access to credit and so on. But that again may be difficult to attain if you have a situation where, for example, inflation rate is high. There's what is monetary policy. There is what is called a policy trilemma. Policy trilemma, simply explains, says that a central bank cannot control the three prices, talking about inflation, interest rate, and exchange rate. You can't have low inflation, low interest rate, and low exchange rate all at the same time. Okay, it's impossible. And that's because when inflation rate is going up, what do central banks do? They try to, especially when they think the factors are monetary, they try to, tighten by raising the anchor, rate, which is a monetary policy rate in our own case. So when you are increasing monetary policy rate, which is the anchor, you should expect that other rates in the economy will also, go up. So if you are unifying exchange rates at a higher equilibrium price, and you are also removing fuel subsidy all at the same time, the two will combine to jack up inflation. You have seen it already. Inflation rate in May, printed at 22.41%, and that's because that is for May. My prediction is that the inflation rate for June is going to be much higher than what we saw in May because of these twin reforms. Of course, that should be expected in the short term, all right? So when you have a high rate of inflation, the central bank will be compelled to be constrained to, again, further tighten and raise rates. And when they're raising rates, interest rates are also going up. Businesses are also having difficulty accessing credit, which will in turn hurt output. That's why I talked about balancing. If you're coming up with an economic policy, you are looking at the holistic picture. How does it affect GDP? How does it affect inflation? How does it affect your macro stability? Okay, that is very critical. If you look at the policy advisory notes, by the council, okay, a lot of very laudable targets. For example, the government is targeting lifting 100 million people out of poverty, targeting GDP of average of 7%. So when you look at all of that, you should also be asking these policies that are coming into place. How do they tie with GDP, for example? When businesses can access credit, that may also hurt output.
All right, Prof.
Whether in the medium, short, medium, or even the long term.
All right, Prof. I guess it's some short-term pain and hoping for long-term benefits going forward. So much to unpack there. But thank you so much. It's always great having you, Professor Uche Waleke, Professor of Capital Markets, Nasarawa State University, and President, Capital Market Academics of Nigeria. Thank you so much for coming on the show today.
My pleasure. Thank you, Daddy.
All right, very quickly now, we see expectations for next week. According to Codrus Asset Management, in the week ahead, they expect profit-taking activities following the recent rally in the market. Meanwhile, it is expected this will be tempered by some bargain hunting activities from early bird investors ahead of the H1 23 earnings seasons. Overall, Codrus reiterates the need for positioning in only fundamentally sound stocks as the weak macro environment remains a significant headwind for corporate earnings. Thank you so much for watching. Don't forget to join us again next week, and you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our productions. Follow us on our social media platforms also. Thank you for watching. I'm Ladi Williams. See you next week.